Ladies and gentlemen, the Singapore REIT market has entered what we call a saucer or a cup and holding formation. As you can see, ladies and gentlemen, this is a cup and this is the handle. But what about this? This is also a cup, okay, and a handle, albeit that the depth of this cup is basically wider and longer than the previous cup. So what does it tell you, ladies and gentlemen, about the REIT market? In fact, if you actually see that the last previous upcycle before the downturn finish in 2018, when the Federal Reserve finally stopped increasing interest rates on 20th December 2018, what gives? Well, we had a sustainable, powerful rally. But of course, it was interspersed by certain intermissions and certain pullback. Now you can see, ladies and gentlemen, that in technical analysis, what we actually advocate in the cup or saucer and handle formation is that the cup actually traces the bottom, meaning that all the sellers or practically the REITs are almost over. The saucer prevents, or the handle of the saucer gives you the almost last chance to actually be positioned in a big way for the upcoming rally. Now, we saw that happening in the global financial crisis. Yes, ladies and gentlemen, we were around during the global financial crisis, and we made big money, and that's why I was able to retire in my early tender years of 40 years old. And then essentially, we saw that happening again in the last upcycle. Interest rates actually stopped increasing in 2018. And look what happened. The rally in the REIT market was up by a humongous 14 months. So ladies and gentlemen, is this now time for the REIT market entering into the source cup and holder formation, where now the holder pattern actually gives you the opportunity to basically position heavily for the upcycle, but at the same time, the handle of this particular cup actually also gives you an opportunity to position stop loss order just in case, the Fed is still continue to be stubborn, and actually pausing for the interest rates. So, ladies and gentlemen, it is a very interesting era for the REIT market that we have just entered into. Follow us closely as we actually delve and help you to guide your portfolio. But best of all, do join us for our class on the 2nd of December, which we have been holding for the last 34 years. So, ladies and gentlemen, has the Singapore REIT market fallen into a cup and handle technical formations? Now, in technical analysis, ladies and gentlemen, it's very important to be able to size this up. Why? Because a cup and saucer formation has been very instrumental in positioning heavily and making good and great money from real estate investment trusts previously. So that established a good neckline for you to be positioning in heavily. At the same time, it allows you to actually allow stop loss orders, which essentially is the key thing, the key linchpin for helping and investors make good money coming out of this almost 2 years of terrible real estate market in Singapore. So, as it is, you may have certain doubts, ladies and gentlemen, at this juncture of the rally, whether the cup is going to be like that or a deeper cup, and essentially whether you want to position your REITs portfolio to actually be able to capture the bulk of the upside, which you saw in the previous rally, which actually rallied 14 months. Now, rest assured, ladies and gentlemen, as we go forward, there will be many things, the analysts will say, fund managers will do, interviews, but always check back the track record of these people. Now ask yourself, were these the same people that did not guide you to avoid this terrible REITs, for example, the like of Manulife REITs, which crashed 90%, prime REIT which crashed 80%, elite commercial REIT which crashed 70%. Or is this the same people again telling you that, whoa, now it's actually value for money? Well, ladies and gentlemen, the people who will actually lead you down the cliff, if they are still singing the same tone, you want to be really cautious about it. Or do you want to have an objective assessment of your REITs in your portfolio, particularly now that REITs basically have to undertake a lot of actions to actually succumb and overcome the higher interest rates environment that we saw in their DPU decretion in this particular year and possibly in the first half of next year? Well, that's what we do in GCP Global. In our class, we have a no-holds-bar, honest assessment of all the REITs. Of course, we can't be right all the time, but we actually scrutinize some of the areas where we could be a little bit better and help share with you which are the things so that we can and be in the best position to actually reap the benefits of the real estate market, investment trust market, now that after 2 years, things have been so bad. So ladies and gentlemen, are you ready for the rally to come? Is your REITs portfolio as resilient and as strong as what you think it should be? Or if you just have any doubts on some of the REITs that you have in your portfolio, some questions, in-depth analysis as to whether the REITs in your portfolio will be resilient and sufficient to help you generate multiple profits if the rally continues, if interest rates are expected to fall next year. Well, we have in our class on 2nd December, where can you bounce off ideas from us, interact with our other GCP Global students who are high net worth individual, family offices, and some of the index funds, and help you therefore strengthen your REITs portfolio as you never thought that you could have. So once again, hope you enjoyed this week's video. We're flying back to Singapore to deliver the class for you so that you can enjoy it and have a wonderful, wonderful year come next year. See you later.